Welcome, everybody, to the ASAP webinar series today. Our topic today is fraud, developing a whistleblower program, detecting, reporting, investigating, and managing cases. Our agenda today is welcome announcements, and then we have a USAID update from Jason Porter. Marcus Howard will present the overview from USAID's risk management team, and Doug Franke will be presenting the topic. And then we have an experience from a local partner in South Africa called Right to Care on their experience in developing a whistleblower program, and Heinrich Stevens will be presenting that. So for notices, I would like to draw your attention to the Q&A icon at the bottom of your screen. This is where you can insert all your questions, and we will be taking some time to pause and ask questions to the presenters. If we don't get to all of your questions, we will be writing them out and sending the answers to all participants today. We have a poll that we're going to be launching in the last 30 minutes of the webinar. I'd like to draw your attention to the scholarship opportunities that we have through Foundation of Professional Development, and I'll have more slides on that. And we have our website, which is opening next Monday, and you'll be able to find all of the presentations, recordings, resources on that website. So here's a little bit about our scholarship program. We have courses, we have 2,000 scholarship opportunities for people working for local NGOs or host country governments in Africa. And we have 11 courses in FPD's School of Business. And you can see number 5 is Fighting Fraud. So that course is presented by Doug Franke and is a much longer course than the webinar we're hosting today. We have these wonderful courses in the Information Technology School, so you can become certified through Microsoft Teams, Excel, both advanced and basics, and then data analytics and Power BI, which is a powerful tool for data visualization. We also have courses in the School of Health Sciences on COVID, on mental health, on gender-based violence in the COVID environment, how to set up screening, testing, and treatment sites, and a short course for frontline workers. And we have a course in the Occupational Health, Safety, and Wellness School on COVID-19 in the workplace. So we encourage everybody to make use of these really terrific scholarship opportunities, which USAID has made available to you. Our next webinars are on this next screen. On August 5th, we will be doing PEPFAR data quality assessments. We'll be doing them in French. Then the next is the PEPFAR data life cycle. We will be repeating this particular webinar on September 2nd in French. And then we have the last one for the fiscal year that's scheduled is PEPFAR expenditure reporting, which is a repeat. So over to you, Jason.
Thank you very much, Catherine. Good morning and good afternoon, everyone. My name is Jason Porter. I'm a local partner advisor with the Office of HIV/AIDS. And I just want to give a few USAID updates on our COVID guidance. So as hopefully those who have been tuning in are aware, PEPFAR is releasing new guidance on COVID and updated guidance twice a week, and these are continuing with the last release on July 22nd for guidance on what to do when a health worker gets COVID-19. All of these guidance documents can be found at the link that is provided here, and they will continue to be releasing updates for guidance on Wednesdays and Fridays. Next slide, please. We also have some information and guidance that's been issued by the USAID Agency Task Force for COVID. So the task force recently collaborated with USAID's front office, our Office of Acquisition and Assistance, and our Bureau for Policy Planning and Learning to host 3 calls with implementing partners. The topics of these calls included USAID's COVID-19 response, the America Acts campaign, and the agency's Over the Horizon efforts. Partners can find a copy of these presentations by clicking on the link once these slides are sent out. The task force has also issued updated guidance regarding personal protective equipment and covered materials for implementing partners, as well as a set of frequently asked questions to help with any questions staff or implementing partners may have. The updated guidance includes additional information on how to make determinations under Exception 1 and Exception 2, more flexibility on regional procurement, and updates to redirection processes for personal protective equipment. And again, you can access these guidance by clicking on the links once these slides are sent. Next slide, please. That's it for updates from us. And with that, I'll turn it over to Marcus Howard from USAID's risk management team. Thank you.
Thank you. Greetings, everyone. I just want to briefly provide an overview of USAID's risk management team. Again, my name is Marcus Howard. I'm the OCFO, ERM and Internal Controls Division Director. I've been with the agency a little over 9 months now. So definitely, have experience of warm welcome with the agency. So I think this opportunity to join Doug to provide this holistic training, which is important to our agency's objectives. So just a brief overview of our team. The team resides within the Office of the Chief Financial Officer here in Washington, D.C. From a strategic perspective, my team assists the Chief Financial Officer to assess internal controls throughout the agency. This also includes a component of fraud risk assessment, the agency's overall risk assessment process, and how that aids decision making. Right now, my team comprises of a mixed staff of FTEs and contractor support staff. One of the initiatives that we will be jumpstarting this year as it relates to this training includes developing an anti-fraud plan for the agency. And as Mr. Doug Franke will speak further today, this will cover adopting the best practices that have been prescribed by the GAO fraud framework and also prescribed by OMB Circular A123. So we'll be further details of the details of the anti-fraud plan for the agency as we circulate that throughout management and leadership to adopt these practices. And Doug will further go in detail about the GAO fraud framework, defining fraud, and then the role and value that it plays to achieve the agency's objectives. Thank you.
Thank you so much, Marcus Howard. I'm going to stop sharing now, and Doug, over to you.
Great, thanks Catherine, thanks Jason, and thank you to Marcus for the introduction. As you said, the agency has a great interest in internal controls, and the purpose of this course being fraud, what we will see, and I'm sure all your history and your efforts going forward will show that proper internal controls can significantly reduce fraud. So we're quite excited about working certainly with the ASAP project and yourselves as required. So welcome. My name is Doug Franke. I'm the Managing Director for Sustainability Solutions. We are a partner of the IntraHealth ASAP project, a great consortium. And our primary role on the consortium is to perform the NUPASs, the non-US pre-award surveys. And in that, certainly there's risk control and frameworks within that. That's what we're looking for, certainly, is the organization ready to receive US government funds. We also perform training, as Jason mentioned, some of those training programs, which are the longer versions of this webinar, for example. So this webinar is composed of slides from what would be a 6-hour fraud course with a virtual classroom. We break out into classrooms and get deep into it, and 8 hours of internal control. That's what Marcus said. That's the GAO called the Green Book, Internal Control Framework. That's a fantastic course. And we think, after those two, you will certainly have an understanding of a control framework. Okay, so with that, I have to say that of all the webinars we've done, this was the hardest to put together because there is just so much valid, relevant content that one could have. It's sort of like Sophie's choice. What am I going to cut out here? I don't want to cut anything, but we did have to get it down to an hour and a half. I will say we will not stop until our questions are finished. Or at least we'll stay on as long as possible. So it may go on a little bit longer. I know the French went on for 3 hours once, but I mean, Catherine, if the time can run, we'll certainly stick with it. Okay, we are going to use our hands. So you might want to look while I'm talking, you might want to look on your screen there because we're going to ask you sometime during this webinar. As a matter of fact, we could even do it now. What I'd like to do is get a sense of all the people on all the participants. If you can find your raise hand button, if you are either first year USAID recipient or you believe next year that you'll be a new prime, I'd like you to raise your hand, and Mary will get sort of an indication of the about 150 people on the actually without minus 10, 140 participants. How many of you fall into that young implementing partner category? Just take a second there. Because really, it's, when one becomes a new U.S. government partner, there are new requirements for fraud management. And as Marcus said, there's an expectation of doing things, I would say, the right way. It's not just the right way for the U.S. government. This COSO framework that he refers to is a global standard for sort of good governance and the way to do things right. And so, we're forced to delve into fraud and, look at fraud, which is hopefully what we're trying to reduce or eliminate. But then, the way we will do that is in controls, through internal controls. So, and what we're going to see is there's never enough time and money to do every control. So we're going to have to prioritize and do a risk framework. And that's what I'm sure the risk management team will work with you on. Okay, Mary, do we have any an indication of how many people are first year or soon to be implementing partners?
Yes, Doug, we have 11 people who've raised their hands.
Okay, well, we'll go with that for now. And then, in about another 45 minutes or so, we'll raise hands again. Okay, so let's jump into it. So as we said, this course is pulled together from existing course material that has been tried and tested for the last 4 years. We've trained over 2,500 participants, U.S. government participants, over 1,500 auditors we've accredited. One of our responsibilities is accrediting auditors all over the world, and approximately 300 USAID employees at various missions. Okay, so this is tried and tested, and it's been modified to try to get to the root, cause of problem, not just fraud, but the root and important things to becoming a compliant U.S. government partner. Okay, so let's jump into, this one is about fraud. So let's look at fraud, and sort of the experts in theory are the Association of Certified Fraud Examiners. I'm sure their annual general meeting is fun. But so that group, though, defines fraud as knowingly misrepresenting truth or concealing material facts to induce others to act against their own personal interests. Okay, so it's for your benefit, their loss. Okay, they further go on to explain that fraud includes intentional or deliberate. It's very important here. Fraud, you plan it, you could lie immediately, but fraud is something that you do probably knowingly, as you say up top there. Okay, again, to deprive other of property, money, or something of value. So generally your benefit or your organization's benefit and their loss. Okay, bringing it into the US government or USAID framework. Now this comes from, the rule is that is our Code of Federal Regulations. So if you've been on your earlier presentations, you'll know that the way we find this uniform guidance is at www.ecfr.gov. Okay, then you click your way through to the 2, section 2 and 200. Eventually you'll get here. And this is the definition of, for defense and prosecution of criminal and civil proceedings. Okay, and in that definition, 435, that's sort of the USAID side. The other side, many of you may also get money from CDC, although this course is very focused on USAID. That would be the CDC focus there, the 75. Okay, but you notice they're both 435A. This is the cost principles. So what they're saying here is these things are fraudulent. Corruption against the federal government, or trying to bribe or manipulate the officials. Things that will be for debarment or suspension, and we talked about that in the mandatory standard provisions, the things that, like the things that are excluded parties list system, buying things from people who might be on the, people who are debarred from doing business with the US government. That's quite important. And then finally, this third one, acts which violate False Claims Act. Okay, and it wasn't until a few years ago the uniform guidance actually came in, and this came in through the cost principles, that false claims were actually linked in for non-US participants or non-US partners. Before that, there was no link. It wasn't in an award anywhere. Okay, so this is quite important. And a false claim is very important. You know, if the person who certifies on behalf of the NGO, I certify that this invoice is correct, meaning the timesheets are correct, the pyramid's correct, the expenses that you're trying to recover are correct. If those are not correct, that's a fraud. Okay, so please realize, I mean, if you're the one who certifies that, you know, all the timesheets, and you're saying to the US government, this is good, if it's not good, that's your fault. Okay, so just be careful there. That's why you should love internal controls, because you have to rely on all the people in the organization to do the right thing, ethically, morally, and of course, you know, legally, doing, let's just say, the right thing. And timesheets is always a good example. Okay, so some other US government and USAID specific regulatory discussions about fraud. So it's in the 113 section of the Code of Federal Regulations, but more importantly for non-US organizations, it'll be at mandatory standard provision M26. Okay, and what this requires is, there's a different rule if you're a prime or a sub-recipient. Okay, if you're a prime recipient, if you get your money directly from USAID and you have a fraud with US government money, okay, you must report that to your agreement officer and to the OIG in Washington. Okay, and in M26, it gives you the email address of who you must send that to. If you're a sub-recipient, okay, you must report the fraud to your prime, whoever gave you the money. So it's like the acting agreement officer, whoever she or he is, the one who signed your sub-award, you must notify them, and you'd have to notify the OIG in Washington. So historically, there's never been a link between US aid and subs, and now there is. It's, you know, obviously it's an unfortunate incident when you're reporting fraud, but that is a requirement. Okay, it's incredibly important you do this. We will talk more about it in the full course, but you know, some of the biggest problems in the world are organizations who don't report fraud, and then bad things happen. Okay, like you can go out of business. I mean, people wonder, if I asked you, what does FHI 360 stand for? You might say Family Health International 360. Okay, well, not anymore. FHI used to be Family Health International, a great organization. And then another organization blew up when they had fraud in Afghanistan, and it wasn't a big fraud, but they didn't report it, went up to management, and eventually USAID essentially said, okay, you know, you're out of business, and FHI got to pick up all their project and their people, and that's why FHI is now 360, and they're so big. Okay, they've grown because of this. So don't let fraud happens all the time. We're going to see this. I'm working on 2 fraud situations right now with organizations. How do we explain this to the US government? I said, do it, and do it quickly. You know, what did we find? What's the extent of the fraud, and these sort of things. So, you know, report it. Because if you don't, I can promise you, you're going to see in these slides, fraud happens every day. But if you don't report it, that's going to be the problem. Okay, so let's just make sure we do report. Okay, another mandatory provision is M12C. And this has to do with anybody's money. This has to do when you've got EU or Global Fund or Gates Foundation or, you know, DFID, non-US government money, any fraud, you still have to report it to your agreement officer. So you say, dear agreement officer, sorry, we hate to report to you, but We had a global fund project and explained the same thing. What happened, how it happened. Now that is when it's management or principals, and the principals are defined in the provision as people who have things to do with money, effectively. So this isn't everyone. This is not petty fraud. This is fairly significant fraud. Okay, so go on and read the provision, but it is, again, not just, this is not US government money. And you may say, well, why do they care? Well, they care because then they're going to ask you, did this happen with our money or could it have happened? Then how to prevent it. Okay, so they'll probably help you figure out how to prevent it, which is, that could be part of Marcus's team's, the RMT's responsibility. Okay, another one, this M24B, is that basically what it requires is that the organization confirm they do not require their employees or subrecipients or contractors to sign any kind of secrecy clause, if you will, that the confidentiality agreements, that they won't whistleblow or they won't, you see down here, it says fraud, waste, or abuse, okay? They won't report. It's almost like their hands are tied, okay? This came out, I think, first in 2015, and the current version is from May 2017. It's been strengthened a little bit, but the bottom line is, they can't try to stop recipients and their employees from reporting fraud. Okay, so we've got some statistics here, because rather than hearing me talk, let's look at the statistics. So we've updated our slides with the current, the most current surveys. And as we see here, that 47% of global organizations have been victims of fraud. Okay, well, the average, if you take the average, is about 50, and this is reported fraud. Okay, I think PwC normally does these surveys before Davos, and then they give big presentations there. So, but you can see here that that's, again, it's not, whoa, it's not just Africa. Everywhere there's fraud. North America, which is, of course, Mexico, Canada, and the US. Now, this is reported fraud. And as we know, everyone doesn't report fraud. So you might want to assume that there's more fraud than even people are reporting. Okay? It's significant. The other one is which top 10 countries. Now, again, this is countries that, selected countries. I have to say, PwC would normally go to their clients in these countries and ask them. But you can see here, India's high, but then from there, not much distinction between China, South Africa with our 10 years of President Zuma, Kenya, the US at 56%. So, again, an average would be above 50% of significant fraud, reported fraud. So think about that. If half of the organizations that PwC works with have fraud, and these are organizations that we're going to see that probably have money and controls in place, can this happen to you? And probably the answer is yes, it could happen. So this slide is about fraud in nonprofits. And again, this was back to the ACFE, Fraud Examiner Group. Okay, and so what you see here, notice what it says here, there's 191 cases that they bring up. And the nature of the fraud is corruption and billing practices. But as they say here, NGOs just frequently don't have the money to instill proper controls. They're all excited and they're going to save lives and all the great things you recipients do. But you're thinking, do we have to put these controls in place, and is it necessary? So, and that's what the final sentence there. There's less oversight of management and lack of internal controls. That's as Marcus said. Okay, fraud in nonprofit, who does it? Well, 39% of it is the management, executives, owners, to a maximum, the median loss is 250, but when you look at the actual numbers, it's much higher. The losses are very high in numbers. The median, as you know, medium, maximum, whatever, and the median is just where the half of the fraud is, but the number is quite high. And then 35% is management and supervision, and then of course you've got your staff. Still, 23%. So everyone's stealing or committing fraud, but notice the loss is much lower. Okay, and again, that's a lack of controls. Okay, so what type of frauds do we have? We have frauds that are either internal by our employees or management, or external, our customers or other parties who can affect us. Okay, and internal fraud is probably more what we have control over. You could say you have control over outside, but those people who are, well, we'll talk about that, but the spamming and tricking and these sort of things are prevalent. But when we set up our control framework, that's what we are trying to have control over. So they call this occupational fraud. And you can see the definition there, the use of your occupation or position of power to manipulate something for your personal enrichment. And this is very similar to the US government's definition of abuse. Abuse is where you use your position to benefit yourself or your family members. Okay, I mean, it doesn't have to necessarily be fraud against the project funds. It could be abuse of your position to employ people or other sorts of things that that manipulate possibly also the outside environment. Okay, so we're pretty much going to define, or we're use occupational fraud for this presentation. Okay, so again, it's normally employees and management committing fraud against the organization, your NGO. Okay, many different types of things. I don't want to go through these. You will get these slides, but just a couple examples there are, you know, we're seeing, especially now in the COVID period here. I was doing some continuing education last week with, you know, U.S. auditors, and you know, they're saying, you know, COVID, and I mentioned earlier, well, we had the preparation for this. You know, the internal control systems haven't switched over to people working from home. There's been, you know, loosening of controls of who does payments and things, but some of the controls didn't follow people to their home workplaces. So, you know, we just have to, there certainly will be an increase in fraud for a number of reasons that we'll talk about under COVID. Okay, but I mean, external fraud here, sorry, this is, we talk about falsified account information. So frequently what people will do, because they have the ability to hack or to get organizations invoices, and they'll send a note and they'll just ask you to change the bank details. Okay, so frequently on the bottom of many organizations, they say, we will never ask you to change our bank details. Okay, to change our bank details, you know, please make sure you coordinate with us. Okay, and the other one, the intellectual property, we're certainly seeing now a great example. You know, under COVID, you say, you know, pick country. Country X is, you know, trying to nip into other people's IT systems to get the hopefully the vaccine. So, you know, these things are examples of external fraud. Okay, so what can affect and influence fraud? Well, it depends. The nature of the organization. What do we do? I mean, if you're manufacturing bricks, it's going to be pretty hard to steal. You know, you don't put bricks in your pocket and walk out. But if you're a bank, or if you're, again, an IT company, or you're doing something of value that is light or, you know, or virtual, you know, it could happen. So again, the environment and again, the effectiveness of your internal controls. If you are tight as a drum, then the chances are people are not going to, you know, be able to hack into you or steal from you. And finally, the ethical values of the company, because as we're going to see, a lot of the fraud is perpetrated by insiders and people who have low ethical standards for themselves or the company. Okay, so this is the well-known, what we call the fraud triangle. It was created by a criminologist, interestingly enough. So Dr. Creasy, and, you know, the fraud triangle is these three items. We're going to talk about opportunity, which is down in the bottom left. We're going to talk about pressure or motivation, and we're going to talk about rationalization. Okay, so these three things, if you have two of these three factors, I'll call them, there's a good chance you are going to have fraud. Okay, so let's start with opportunity. That's the opportunity to commit the fraud and not be detected. Okay, so this is where poor internal controls comes into place. And you're going to see in a few more slides, this is the main problem. If you don't have controls, and people may think, no, my employees are good, they're not going to steal. I'm not saying you don't have good employees, but if the opportunity is there, and as the next slide says, if there's pressure or motivation, it could happen, and assume it will happen. Okay, the second part of opportunity is where people can override the system, and this is normally management. Okay, although you may have a system set up with proper segregation of duties, that this guy supports it and she approves it, and, you know, she releases it, these funds. Normally, if management is like, okay, well, you know, just do this. We have a special payment here. I'm the boss. Please do this or do this. So, you know, that's an override, and you're going to see that's quite a frequent occurrence of how fraud happens. Okay, so again, that's opportunity. Next is pressure, incentive or motivation. So pressure is when you are committing fraud because maybe you have a financial problem. And again, this is one reason why under COVID we have such potential issue is, you know, people don't have jobs. They got to feed their families and they don't have any money. So there's great motivation there right or wrong, there's motivation to, you lose your job and you need money. And so the whole point is, if that opportunity is there and you've got the motivation, that's how fraud happens. The second one's quite interesting, and I didn't think about this until we redid this course and realized that, possibly you can become addicted to creating fraud. Now, so addicted, meaning, you get away with it once and you think, geez, I did that once and it was so easy. Let's see if I can do it again. And so basically it almost becomes a game to see if you can get caught. I mean, how many times do you see on TV or you read about people who, like movie stars and people stealing things from convenience stores, $5 and $10 things, and you think, what, they could have bought, the whole store. But no, they do it to see if they can get away with it. So, don't underestimate that, some people may be driven, not because they need it, but because they've got this sort of, this addiction, we'll call it. The third point is rationalization, okay? And that's where people justify it that it's okay. Because most people think it's not okay. It's not okay to steal. It's not okay to commit fraud. But if everyone else is doing it, some people say, it's my turn. In many countries around the world, the police are corrupt. And hopefully you'll have the good ones, but he or she's, again, pressure's there, and pulling people over, and the guy doesn't have money to buy food for the family. Well, you can rationalize it to say, you know what, every cop in this country is taking money, my turn. Okay, so the whole point there, but the most important thing is the control. If you have controls and you just can't steal, if you say, I can rationalize it, everyone's stealing and I need the money, but if there's no way to steal it, you're not going to get it. Okay, so it's going to be making sure the internal control framework is such that you're not going to allow it because there's no way to do it. Okay, and I'll show you actually. So this tool, we'll talk about when we're talking about a risk control framework, is a way to consider, for our employees or our management or whatever, our control system, do we have that in place to reduce the chance of fraud? Okay, so here, this is quite an interesting slide. There's not a new one. This is a 2018, but they haven't updated it, I think, for COVID reasons. But notice the percentage of fraud that takes place for which reason. 59% on the bottom there is because of opportunity, loose controls, 21% incentive or pressure. And again, during the COVID period, that is going to be increasing. So you've got, what is that, 80% there of fraud happens because of those two factors. Okay, rationalization, well, again, if people are good, moral people, then the last thing they'll do is steal because they can justify it. Sometimes someone say, oh, I'm gonna die if I don't get $100,000 for a cancer treatment, but they just can't justify it. They said, yep, can't do it, God's will. Even if they could steal, they say, no, my morals are too high for stealing. Okay, so you can see there, but the big one is there's an opportunity, and that's what we're going to try to quash and make sure you understand how to do that. Okay, I'm going to just take a break here and ask if there's any questions. I can't see hands up, so I'll turn it over to Mary if there's anything right now, or any comments from Marcus or anyone else.
Sure, Doug. First question, how do we verify whether somebody committed the fraud knowingly or unknowingly?
Okay, I mean, you could talk about, lie detector tests. Those get expensive. You would certainly, I guess you could look to see, I'm just thinking of your sort of normal frauds, which would be, internal control breakdowns where, someone manipulated, signed off on someone else's behalf. So I'm the accounts payable clerk and I'm going to try to give myself a payment. Okay, so something comes in and I can manipulate maybe our master data in terms of who the payees are. And that person can change in the accounting system. So if you're supposed to pay XYZ company and their company is at Standard Bank, and you can change that person changes it to a different bank. Frequently there'll be controls over that. There'll be IT controls, okay, and that will be part of our third component that we'll talk about in the internal control course. But there should be controls over that. Controls over who is allowed to change, first of all, that type of data. And then frequently the systems will actually say, okay, on this date, that payment details was changed. Okay, frequently fraud leaves a trail. Okay, so I can't say, obviously there's so many different ways to do it. I think the US government, last time I looked, the USAID had a handbook on, it's like 123 different ways to commit fraud. So, it's all the bad cases or the cases they've had that they want people to be aware of how to prevent that. So I can't say, lie detector is one, be expensive. There's probably a path and a trail.
That's the only question we had today, we have so far.
Great, thank you. Okay, so let's jump into then fraud management. Now this would be what Marcus's team will talk about, and Lydia, I know we spoke about this a few days ago. And so there will be a risk management process, an overall risk management process, and each of the risk management for the organization will have a fraud component. Okay, so if you just think, and we'll look at a framework here in a few minutes, but within each of our, Marcus talked about the COSO framework or the Green Book, the overarching global framework for good governance. Okay, and so certainly governance, the first point would be risk governance. That means management sets up a proper set of controls. And there would be the board and management together who create the environment. They hire the right people, they set up the control structures to, and this mainly you'll see tone at the top a few times. The tone at the top, does the leadership believe in good governance? Do they eat their own dog food, people say? Do they walk the talk? Do they live those values? Okay, that's what's set up in the sort of the first component, if you will. And then the risk assessment is where we figure out, and that's what this control I'm going to show you in a few minutes. This control assessment, where people have to sit down and determine what could happen. And that's where it's very important that's why diverse boards are so important. Risk management assessment will normally be performed by people who are on our board who come from maybe a bank or a doctor or a lawyer or someone who is diverse from our organization, who may have seen things happen in their environment which they bring to ours to help us identify risks. Okay, and then the control activity, we're going to have some discussion here about how we can prevent or detect fraud, and we're going to see it's one or the other. You'd prefer to prevent it from happening, but that frequently takes time. It slows processes down, and most people use detection, meaning after the fact they find out that fraud happened. But there's ways to do both of them, and we'll talk about that. Okay, and then investigation, corrective actions, and then of course monitoring that your system is constantly monitoring. Could frauds happen? Are frauds happening? Okay, so when we do a risk assessment, that's what we said. It's a dynamic process. People talk about SWOT analysis: strengths, weaknesses, opportunities, threats. That could be performed then. It'll be interesting when Heinrich talks a little bit later here from Right to Care. That's a fantastic organization. It's one of the largest U.S. government partners. They've got over 3,000 staff. I think they get over $100 million a year, and they've got fantastic processes in place. We'll ask Heinrich how often they do it, but certainly it should be done at least annually. And I would expect that it would be led by possibly the internal audit group or the external audit and risk committee. Okay, most organizations now would have to have an audit and risk committee, which are not very fun. I sit in the American Chamber's Audit and Risk Committee here in South Africa. There's 3 of us, and at every AGM we ask everyone, please put your hand up if you want to join the committee. We have lots of fun, and no one joins, okay? And because it is no fun. I mean, assessing risk and fraud is not fun, but someone has to do it, because if you don't, you will have fraud and there will be risk. Okay, so we'll show you what this is, and that's where people sit around and they brainstorm, and that's where it's so valuable to see. The banker says, "Here's how we had a fraud," and then the IT guy says, "Well, here's what's happening in our area." And again, doctors and nurses, and depending on most of us are PEPFAR related, so certainly there'll be a lot of fraud happens by fictitious employees, ghost data, those sort of things as well. Okay. So this is an example of a fraud risk register. This is the whole one. I break this down into 2 slides. And this is, we call it a fraud risk register, but you would do this for all risks. It's just that you could identify frauds, okay? So maybe just to make it easy, I mean, you could talk about a fraud, but why don't we talk about something very relevant right now, which is risk. It's not a fraud risk, but we'll just say COVID, for example, right? COVID is a risk for all of us. So what you do is you'd complete this chart, our risk team would complete this chart, and it wouldn't necessarily, I mean, you might start by saying, okay, financial fraud, we'll talk about financial risks, reputational risks, fraud risks, other type of risks, physical risks, but regardless, this is what you do. You start by, what is our risk description? So we're gonna say, okay, our risk is that our employees might get COVID. Okay, and what is the cause? Pick your choice, but the cause would be, obviously they aren't either washing their hands or they're not, or again, however many ways you can become COVID positive. Okay, and then the key controls right now would be, well, what are we doing? Okay, so we're social distancing, we're washing our hands, we're wearing masks, and we in our office space, we are using every other seat. In our boardroom here, what we've done is we've removed the seats so people can't get close, and those are the controls. So what controls do you have in place? Okay, and then these next two are very important. What's the likelihood? This is how we assess our risk. What's the likelihood that the organization is going to experience COVID? Well, I think it's quite high that some employees will. What's the probability of everyone getting it? Well, again, you have to assess this. And throughout this whole thing, it all is based on judgment. There's no right or wrong answer. I mean, three people could have different answers, but that's why it's so important that you have a broad group who is assessing this risk. That's why I said the board normally should, hopefully your board or your trustees or directors are diverse. They're all just not yes people who say whatever the boss says. They have to come with strong independent minds, okay? So likelihood is one important point. And then what's the impact gonna be? Okay, now obviously COVID, the impact on those who have it could be horrible and catastrophic. But as an organization as a whole, even if half of the people get it, and let's just say the death rate's 2%, what's the risk for the organization from an operational point of view of COVID? Okay? And then I can't see the next one because it's covered on mine. Let me just close this for me. Yeah, the risk score. So that will lead to a score depending on, I mean, this is a whole methodology. I don't want to get too deep into the methodologies, but we can certainly share this with you, or I'm sure Marcus and his team will have something extremely similar. Okay, then someone has to own this risk. So here we're saying COVID, okay, it's probably the HR person who is the owner of this because she or he is going to be, they care about the health of our employees. And then you'll have, so what are we going to do? We've assessed the risk now. What actions are we going to take? Well, we're going to talk about working from home. We're going to talk about coming back and further distancing or half work in the office, whatever actions you take to address that risk. And then what other further actions can we take? Well, telecommuting. We're only going to work from home. All of us, I would bet 85% of us here are not working in our office. So, that's further actions we can take and so on. And someone's got to own that action plan. You can't just talk about it and say, okay, great, now we know our risk. No, someone's got to be responsible for dealing with it, okay? And then again, you're going to have dates and the status and you'll keep reviewing it. So this risk register is a live document. And as every sort of couple of weeks, as things get ticked off, the status will certainly change. So how do we use this? So those risks then get transferred to what we call a heat map or a risk map. And based on, you'll notice across the bottom there, it is I can't see it because mine is covered here, but the impact, likelihood should be across the bottom and impact going up the up and down axis, okay? So if you said, okay, so what's COVID? You say, all right, what's the probability of our staff having COVID that's going to totally cripple the organization? Well, the likelihood is probably high that people are going to get it, but based on how many and how severe, the impact's probably somewhere up in here. The impact, of course, on the individuals could be catastrophic, but as the organization as a whole, it could be here. Okay, so is COVID, is it going to bankrupt our business? Probably not. So what you do though, as the management says, okay, how about these things that are up here? Catastrophic and impact is high. Okay, so if you think about it, so our hurricanes and those things that happen, you say, great, I am in the Panhandle in Florida, or I'm somewhere on the coast of Georgia, and this thing's bearing down on me, and it is going to hit. And you're 3 days out, and you see on TV, it's going to probably hit you. Likelihood is high. Impact, well, your building is made of glass. That's a problem. The impact's going to be massive. That's going to be up in here. And so this is what management has to do. This is the risk register, not just for fraud, but certainly fraud as well. You know, things that could bankrupt you because someone has control over your bank account or your data or things, you know, will be up in here. So management, as we say, never has enough money to put in controls in place for everything, but certainly anything that's up in that sort of area you would like to address. And then you know your risks and you can deal with them. That's the action plan. And management should keep track of this. And again, if Marcus or Lydia or anyone wants to jump in here, or Heinrich, anyone, feel free.
Hey, Doug, it's Marcus.
Right?
Yeah, I totally agree. You're spot on. And we actually have this same fraud risk register tool as well. And so this, you know, as I see some of the questions that are being posed in the chat, this is just a comprehensive way to document, as you mentioned, those key fraud indicators, the impact and likelihood, and then that drives, because a common theme in some of the chat, that pretty much drives the decision making on the cost benefit of how to implement the type of control, whether automated, preventative, detective, developing segregation and duties, and so forth. And then, you know, once this is documented, it just provides a risk register to then continuously monitor as things, you know, change globally, depend on, just the location of where the organization is operating. And then just emerging issues such as cybersecurity, you name it, you know, so this is, a really, holistic, comprehensive tool to use.
Great. Have you seen any, from a COVID point of view, any organizations reassessing their risks?
Absolutely, and actually the agency has been doing that. So I've been leading conversations with our senior leadership in conjunction with our USA COVID task force. So we've been looking at it from all angles of continuity of operations, the ability to monitor and evaluate the performance of programs overseas, considering the impact it has on staff with authorized departures, looking at, of course, cybersecurity, the impact of, using laptops and mobile devices, remotely. So yeah, this COVID-19 has definitely drove a lot of, reassessment of risk, and, but also looking at opportunities as well, expose some areas that the agency can improve. So then it drove a lot of that decision making as well. So it definitely has been an opportunity to to refocus.
Okay.
Mm-hmm.
Those of you who've been on the webinar. Sorry, go ahead.
Oh, hi, this is Lydia from the risk management team that Marcus introduced earlier. Just another element that I wanted to add was just that what we're seeing in the US federal space is definitely a distinction between fraud risks and actual issue management. And so ensuring that you have sort of either a risk approach that is complementary to looking at either the specific COVID-related risks, or looking at how risks are integrated within the overall risk environment, or sort of two divergent ways that we're seeing some of our federal colleagues looking at emergent risks and their risk profile. But there was definitely some robust discussion about what are actually just not risks, but real issues that need to be addressed also. So just wanted to make that point. Thanks.
Okay. So those of you who have been on earlier webinars know that frequently, because we are auditors, frequently we put on the audit hat here. So when I have the hat on, I'm speaking as an auditor. And I think it's very important here, as Marcus said, and as Jason said earlier, twice a week, the OAA puts out the COVID information. But as we said in earlier webinars as well, as an auditor, not that they forget, but it's going to be very important that you can document, because many people are at home, many people are still incurring costs and filling out your timesheets. And although USAID and the other agencies are quite accommodating when it comes to this, I think it's incredibly important that when you have COVID-related expenses, make sure you're working with your AO and AOR. First of all, read the documentation, okay? The letter gets updated twice a week, and I think it's cumulative. It just keeps building on. So by now, there's quite a lot. I think there's 9 different sections. I think the audit section is in 8, but please make sure you document. And it's important that you document. And when we're going to talk about expenses, and auditors are going to say, geez, this isn't reasonable. Why did you have to pay this? And I'll just give you an example. I mean, when COVID came out, everyone was supposed to, go out and buy like hand sanitizer. Okay, so it might have been $5 for hand sanitizer normally in a Walmart or somewhere, or Kmart or somewhere, and that's normal. But now, COVID hits, and next thing you know, it's $20. And you have to document that. You say, well, this is, is it reasonable? You say, well, I need it for my staff, but please document. Because later on, like hopefully 6 months from now or earlier, but when things go back to normal and sanitizer's back down to $5, and the auditor says, you paid $20 for this? Why? That's outrageous. That's not reasonable. You say, on that day it was, okay? And same thing, all of us have to have these electronic thermometers. I mean, there should be $15, $20, and we paid $60. We had to. You need to do these things. So just please consider all of your expenses in the COVID period and document if they're abnormal. Please document why you had to incur this cost. And again, work with your AO and AOR to get any further. If you have a question, it's available anyways. When I say available, the ability to always speak with your AO to get confirmation on a cost reasonableness, allocability, and allowability. Okay, that's your mandatory provision number 2, and it's also, write this down, it's 2 CFR 200.407, prior approvals. So there's 2 different ways that you can use, 2 different rules you can use to get certainty. Okay, because in the COVID period, last thing you want, you're keeping your people alive 6 months from now or a year from now, and you're getting your audit. You don't want to get hammered on that side as well. Any comments there from our? Okay, great. I'll carry on. So fraud control activities, this is the actions that we're going to take to mitigate risk. And so we sort of talked about this process that I've just showed you will detect whether we may possibly have frauds and how they're going to occur. Okay, so as Marcus said, frauds could be either preventive, so fraud controls. We can either control fraud preferably before or possibly afterwards. So all these sort of factors or all these things we might do could be one or the other. And preventive controls, it's what stops a fraud from happening. So it prevents it from happening. They could be, either one. They could be manual, or the computer could do it. It could be analytics. But frequently, because of volumes, we tend to rely on systems. And we have to be very careful for relying on systems and not looking and thinking and being maybe outside the box. Fraud could go undetected. Okay, so prevention, as we said here, and it's not just, what's the risk? We forget about reputational risk. The reputation. I mean, Catherine, you'd mentioned in the preview for this course, the warm up. The doctor that had created a fictitious offshore company and defrauded that NGO by tens of thousands of dollars. When that became public, that organization was tarnished. It was a fantastic organization, but all it took was one of the senior management people to commit a fraud, and then they're tainted for a long time. Okay, and this certainly happens in many businesses. Food companies and pick at banks when we had the blow up there. People just get a bad reputation, and you may not recover. And it's been proven from a stock market point of view, if you have a high reputation, if people trust you, your trusted brand, your value is higher. And certainly, that would prove true in NGOs as well. Those that have been doing work in and out for years and years, don't have fraud, are perceived to be, ethically motivated, you will do better. Okay, so let's get into. Okay, let's just move on. Fraud prevention here. What else do we have? Okay, I think the second paragraph here is worth mentioning, that you can prevent fraud, but it's never 100%, never 100% possible. And a lot of times this has to do because of management override and collusion. Okay, when we set up internal controls, we set up segregation of duties. This person does this, the next person does this, someone else does the sign off. We set it up assuming these people are all ethical. But all it takes is 2 or 3 to collude. And as we're going to see, I think we've got a collusion slide. You can't really plan for collusion. I mean, you assume your people are ethical and you hope they are. But if they're not, and again, that's why if pressure comes in and everyone says, just this company's going down, organization's going to close in 3 months, a lot of money still in the bank. What can we do about that? You know, that these things could happen. So I mean, you hate to plan for it, but that's where, you know, so that's why you need detective factors as well. Okay, so management, what's their role? This really, truly, it starts with management. And as we're going to have I have a slide later on that shows sort of a organization chart, but it's management that sets up the policies and procedures at the high level. They say, we will have ethical behavior. So, you know, most people have, many companies have your goals and visions and dreams and expectations. And, you know, many of those are, you know, we're going to be the most ethical organization delivering health services in X country. Okay, well, they sort of set that. And the question is, you know, do they live those values and do they put in place, enable those values to be lived and to be caught if they're not? Okay, so again, you're going to define what the operating procedures are. And as we said, segregation of duties and management doing their job, reviewing. What we're going to see here is management not doing their job is probably the second or third most common problem or reason that fraud happens. Even though we set up the control, management doesn't look at the reconciliation. They don't look at the timesheets. They don't look at the procurement, the purchase request. They just say, well, so-and-so filled it out. They've ticked the box, and too much box ticking, and that's where fraud happens. Okay, so again, we need to make sure, again, we're talking about hiring practices, hiring ethical people, making sure you're getting what you need in your organization. Okay? Frequently, it's difficult to get, well, certainly difficult to get background checks, but there's nothing stopping you from calling on someone's resume or CV, calling their past employers. And possibly even, you know, what we do, and we see other organizations, you know, before you assess people, before you hire them, it's not expensive at all to do psychometric tests to see whether that person is going to be the sort of person you need. Okay, there's something called like shadow match. You can say, okay, I need, our finance team needs people like this. So you take your top 5 or 6 guys, you say, what are your attributes? What are your traits? And that's your match. And then you get the new person to see if his or her traits match that traits. And if they're not, that person may not be a good match. So there's stuff you can do that's not expensive to get the right people into the organization for the right jobs. Okay, some people are introverted, some are extroverted. We all know those things. Okay, so again, the tone from the top is management leading. So it's the board and management leading and dealing with all these issues. Okay, when there is fraud, you need to deal with it. And then you've got to, I hate to say it, but you know, frequently you should terminate people who commit fraud. You need to set an example. This course, unfortunately, we don't have time to talk about conflict of interest in ethics, but there's a huge correlation between ethical principles and maybe what Heinrich's going to talk about in whistleblowing. Okay, and you need to deal with both. If there's unethical practices, you got to get rid of the person. If there's fraudulent, you got to get rid of the person. That's assuming you've gone through the proper HR procedures and, you know, if there's warnings and that kind of thing. But at the end of the day, nothing tears apart an organization worse than people know someone committed a fraud and management did nothing. Well, that allows for rationalization, saying if he can do it, why can't I do it? I'm not going to lose my job. Okay, so that's why these are the type of things that management has to get involved in and setting policies. Okay, so fraud in small businesses, again, that could be quite unique because, as we say, there's never enough money. And I would say small businesses, this include NGOs that frequently are set up by passionate people who are going to, you know, do something or save the world or change things. But certainly, frequently they're not business people in the sense of they are not structured as a control framework type person. Okay, frequently there'll be entrepreneurs or passionate about a cause. The last thing they're going to be is a control freak. Okay, I would think. So here we have the controls in small businesses, and you're gonna struggle to read these, but these are anti-fraud control in small businesses. And I can just tell you what they are. So the blue or the top line, which is smaller, is the small business, and the green line would be the big business, okay? And so you won't be able to read the numbers, but fraud controls are, the first one is external audits, okay? And it's 56% small businesses have them versus 92%, okay? External audits are a very good fraud control because it's outside the company, and auditors are meant to look for that, okay? So you can see the disparity here. The next one is a code of conduct, and that's 48% versus 91%. So again, corporates have a code of conduct, and they expect people to live by those codes. But NGOs, okay, it's only 48%. Next is that management certifies the financial statements. Okay, well, frequently in NGOs, those management are not financial people. They can't read the financial statements, okay? So that is 39% versus 85%, okay? Management is held responsible for the controls and against fraud, okay? Only a few more here. The next one is management review, where again, 35% on the small side, 76 on the big side. So again, management being, holding their feet to the fire to do it. But again, frequently management in the corporate world knows it because they know about fraud. Whereas sometimes in the not-for-profits, they say, well, we're all in this together. No one would do that in my organization. Well, unfortunately, they do. Okay, and the next two are external audits and internal audits. And again, it's just, the internal audit is the one that I want to highlight on, which is 31% versus 88. And so frequently what happens is small NGOs of any size, I mean, I know at Right to Care, they certainly have an internal audit department, but there's many mid-size NGOs that are spending, $8, $10 million a year who don't have internal audit, either because they don't know that they need it or they say we can't afford it. Okay, so just be careful. I'm sure Marcus and the team and Heinrich may comment on that, but assume that could be worth its weight in gold. And if you can't have an internal audit function, you can't afford it, you can outsource that to, you wouldn't be able to do it to your auditing firm because they wouldn't be independent, but there'll be other people who could do that. Okay, so and again, you can go to the ACFE website and you can see this, but the bottom line is, smaller organizations and businesses, they just think they can't afford it. My question is, can you afford not to have it? Okay, so anti-fraud controls in the not-for-profit sector, as we see the top three, as I said, lack of internal controls. They don't set it up. And management doesn't review, okay? They just don't do their job. Or the third one is they override controls. And that leads to fraud. I'm the boss. I can tell you to approve this voucher, even though the person who should have done it wasn't there, or it could be sick. And again, you just override the system, and that's what happens there. Okay, so fraud detection. If you can't prevent it, then we should have systems in place to detect it after it's occurred. That's what fraud detection is about. Okay, so you could do this through, again, reconciliations or analytics or analysis. There's a lot of smart software out there these days to get into your general ledger and say, okay, if most travel vouchers are between $30 and $60, and so it sort of throws out, okay, everything over over 60, we'll look at that a little further. So you can use technology and AI to do a lot of this. Now, they wouldn't have small NGOs doing this, but there are ways to use technology smartly these days. There's an app for that sort of concept. Okay, data mining, trend analysis. You don't have to, again, just budget versus actual, looking at those sort of analyses also work. Okay. Okay, so detecting controls, detection of controls in the MPO. So this is quite interesting. Is the most common detection is tip-offs. Okay, and this is why it's important when Heinrich's going to talk about having whistleblowing, because that's where most things happen. And we'll look at this in a minute here. So a tip or complaint, then internal audit. And again, if you don't have a function, outsource it. You can do it part-time. You don't have to have a full-blown internal audit group. A lot of times, even outsiders' eyes are better than insiders' eyes. And then thirdly, management review. I mean, those three together there, 57, 80% of it is basically those three, the big three, okay? So again, management has to set up these internal controls and, internal controls and management doing their job, as we say, is the first line of defense. We need management to be involved. Organizations don't run on autopilot. Management must be involved. Even if you trust your people, trust but verify. Okay, so what we're going to do here, now I'm going to ask you, so remember, preventive controls stop a fraud before they take place, and detective controls would be a control that happens after the fact that catches a fraud. Okay, what I'd like you to do, I'm going to go through 10 of these, and I'd like you'll see here, I want you to raise your hand. That's why we tested it earlier. Raise your hand, and Nancy's going to give us the results here if you believe. So the question is screening potential employees doing their recruitment? Okay, so you're going to screen people, so you're going to understand their nature. Now, could that be a preventive control, or do you think that's a detective control? If you think that's preventive, please raise your hand. What do we have, Nancy?
Okay, Doug, 44 people, 45 people have raised their hands.
Okay, so we'll see. Okay, so we don't 45 out of how many, but we will see. So I think we had about 100. I can't see how many participants we have. What's the total? Participants 171.
160.
Okay, great, 160. So, but I'm not sure if everyone's participating, so we'll see when it goes the other way. And so that is a preventive control, correct? Okay, because you're not going to hire a person who is a skellum or someone who is not trustworthy. Okay, the second one would be a bank reconciliation. Would that be a preventive or detective? So if you think bank reconciliations are preventive, raise your hand. If you think it's detective, keep your hands down. What do you think, Nancy?
So far, 13 people out of 161 have their hands up.
Okay, so that would mean, okay, if we had 45 before, we have at least 45 people who are voting. And so a bank reconciliation would be a detective control. It happens after the fact, right? A fraud takes place, someone did a bad check, there's a check bouncing or something, so the reconciliation takes place, so that would be a detective control. Okay, for 3, you use closed circuit television recordings. So recording of TV, is that a preventive control? Raise your hand, or don't raise your hand if it's detective. You can see this is all anonymous, and we're not keeping any records here who said what, so don't stress about it.
20 out of 161 have their hands up.
Okay, so closed circuit recordings. Now, that's quite interesting, and I did want to raise this to somewhere along the line, and a number of you said preventive. The interesting thing is, I mean, actually it's detective because we said closed circuit recordings, which again, you are going to record what happens and look back maybe if there was a fraud, who came in the building at 3 in the morning, that sort of thing. But it's a good point. I was talking to my team about this earlier, and they said, you know what? Some of these things are also preventive, because if you know you're going to be recorded, you don't do it, right? So it's frequently a detective control that people realize, I am going to get caught. Okay, so some of these, those of you who said it's preventive, you are right in the sense that if you were thinking, I know management is going to review that, I will eventually be caught. Okay, so the next one, 4, password access rights of your IT systems and your emails and that sort of thing. What would that be, preventive or detective? Hands up for preventive.
50 hands up out of 161.
Okay, that would be correct. Yep. So it is preventive. It's a password. You can't get in to commit a fraud, and so that would be preventive. Okay, you see how this works now? Asset verification. Do we verify assets? Is that preventive or detective? Hand up for preventive.
14 out of 162, 14 hands up out of 162.
That would be correct. Detective, that's what we're doing, our physical assets, what got stolen, what happened to the, X, what happened to all our samples, our materials, our supplies, our money, what got stolen, that's asset. Okay, so hotlines and whistleblowing. Do you believe it's preventive, hands up, or detective, hands down?
15 hands are up out of 163.
Okay, That would be the majority would be that it is detective, and that's correct. The whistleblowing normally happens after the fact. People say, did you know this was happening? And hotlines. Now, hotlines could be, okay, because what you could be, and again, our team had, this is actually where the question came up, because a hotline might be preventing a fraud. So those of you who said it was preventive are correct in the case of you might be preventing the next fraud from happening by whistleblowing, or the hotline says, you know, there's going to be something happening. So that also could be both, but I mean, but conceptually that would be possibly more of a detective. Okay, auditing. Is that a preventive, hands up, or detective down? Nancy, the answer is, Nancy.
10 hands are up out of 160.
Yeah, okay, so that would be detective. Auditing takes place after the fact. Now, if this was internal auditing, that might be preventive, because internal auditing creates policies, but external auditing or after the fact would be detective. Okay, segregation of duties. The systems we design for preventing fraud, is it preventive or detective? That we segregate people's responsibilities.
Fifty hands are up out of 159.
That's correct. Segregation of duties is preventive. We are preventing fraud by segregating duties and forcing people to, you spread out the responsibility, assuming there is no collaboration, you'll have good controls. Okay, last couple, let's go to code of conduct. Is a code of conduct prevent or detect fraud?
Forty hands are up out of 160.
That's correct. And the final one is budget preparation. Does preparing budgets prevent or detect fraud? Hands up for prevent, hands down for detect.
Fifty hands are up out of 159.
Okay, so it seems like, you know, I mean, it seems like there's about 50 people participating, and that is correct. It's preventive. Okay, so these are examples of where we can design our systems. Some will be preventive, some will be detective. But the important point in there also is, even though you may have detective controls, as some of you did catch with the CCTV, if you know you're going to get caught, that certainly reduces the chance of taking that risk. Okay, so that's why we are very clear. Management's very clear that here's our policies. We want you all to be ethical. You know, we are going to, but we are going to have. We will catch you, and when that does, whatever the policy of the organization is, we will implement that swiftly. Okay, I'm just going to get through some of this here. So we sort of covered these things, so I'm not going to go here. I do want to get to some important slides and then get to Heinrich. So it's quite interesting about fraud detections, where the frauds were reported. Okay, and it's quite interesting that the first, the 43% is tips. Okay, the next was 43%, and then internal audit was 15%. And then management review was 12%. So those three things together, just people doing their jobs and having a whistleblowing system that Heinrich will talk about, is massively important. And although it's not in this course, in our ethics course, the same thing, poor ethical behavior, you know, bullying and these sort of things. That's not fraud, but if we have a proper ethical framework with hotlines, and we won't call it whistleblowing, but you know, just the ability for people to vent and say what they believe. Because what we find is most people are honest, okay? And if we broke this tips down, okay, is the question, is it employees or vendors? And it's like 60-40 is employees, but a large number of tips are by our suppliers. They say, oh, geez, they call up the finance manager and say, do you know, this guy offered me a deal or a discount if I gave him a special deal. Okay, so just realize you also want to set up controls that you're outsiders. That's why restaurants always say, please get a cash receipt. Okay, ask for a receipt if you don't get one, because if you don't get a receipt, then things don't get written or don't get recorded in the cash register. So there's various ways to enable feedback from your employees. You can have management calling your top, or not just top, but your customers on a regular basis saying, how did we do? Anything all right? you need that interaction with your, not just with your employees, of course, but with your suppliers and vendors. Okay. Well, there we go. That's the one. So employees is the greatest, and then the customers, and then anonymous. Well, anonymous has got to be somebody. So it's either an employee, probably, or a customer. So there you've got some very high percentages there. And then you've even got vendors out there, employees, customers, vendors. I mean, what's the difference? Customers or vendors, that's the public. Okay, so that's quite important that you make sure your systems enable everyone to weigh in. Okay, so now I'm just going to briefly cover what we would, this is on our Green Book course. Again, it's going to be on your list, your menu to choose. And that's an 8-hour course. And as Marcus mentioned, it's this COSO framework, which is an international standard that is put in place by management. And what I'm going to say is what I learned is if you have a proper framework, you have a great chance at reducing fraud and having a success of the business. And if you don't, there's a very good chance that you will fail, not just because of fraud, but because you're just not managing the business. And you know, this framework isn't designed, and people say, well, geez, it can't work for us. This framework works for everybody. It can work for a hospital, work for IBM or Microsoft. It can work for your NGO, and it will, as long as it's employed correctly. So it's about these 3 categories. The objectives are you want efficient and effective operations. So what you're doing every day, you're performing tests, or you're doing data, or you're training people, you're screening. The reliability of your reporting, which is quite important. Certainly USAID expects normally monthly reports, and of course your M&E reports as well, very important. And then your compliance, and we've already had a webinar on compliance, but again, you know, these dollars that you receive from USAID do come with some strings. And that's why we'll talk about, you know, having a compliance person in your office who's responsible for that. Okay, so here's where these things are defined. And for USAID, that would be the 2 CFR 200.61. Okay, and it just say, great, internal controls. It's a requirement that we have internal controls in our organization. It is a requirement. It's also a requirement in your mandatory standard provisions, but I don't think that's strong enough. And I would certainly devote your attention to going to 303, 200.303. And it says that you must, and that must, what we talked about in earlier webinars, that must is the auditor, when he or she sees the must, okay, in your award, they will audit this, okay? Because that's our job as auditors. Part of our generally accepted government auditing standard says now, we were told by the OMB, if the recipient, if their award says must, test it, okay? So assume we're going to test that you do have. And what this A says is it says you must have a system of internal controls. And then the second thing, the second sentence says it goes on to say these controls should be in compliance with the U.S. internal controls of the federal government, which is called the Green Book. Okay, so the Green Book, you know, it's known colloquially as the Green Book. That's the controls that Marcus was talking about, and that the management team will help you with, risk management. Okay. Then it goes on, it's not just that, so I've got something here. Okay, we got a glitch here. Okay, so the next one, that was the A, but also these are the extra bits that people forget about. You must have a system of controls that complies with the regulations of your award. Okay, then you must evaluate whether you are doing it. So you need a sort of a control person over the control, a quality control, which would be, again, maybe your external auditors or your board sort of things, make sure these controls are in place. And then when bad things happen, you have to take prompt action, okay? And this could be in your audit, or it could just be, you know, we have blowups and risks and fraud. You got to do something about it. You have to adjust your risk register. You have to adjust your controls. And finally, the fifth one was sort of added. This is where we talk about protected information. Okay, people HIV status or whatever it is that we're looking at, we're gathering you know, information about our base or our customers, whether it's democracy and governance, or whether it's you know, gay, lesbian rights, or whether it's advocacy of certain type of things. You know, that's sensitive information. You have to make sure your system can control all that. That's why it's so important, our passwords and how we maintain our data. And again, that's why COVID, you know, oh, now we're working from home. Well, how's that router? Do you have your home router? Does it have all the things that the office does? Okay. Anyways, those are the things that your internal control system should control. So as I said earlier, the summary, and this is out of the GAO Green Book. we identify our objectives. What are our projects trying to achieve? We put controls in place through management and the team working together. If the controls are in place and operating and being monitored, we have a good chance of achieving our objectives. But I've said possibly, but there's no doubt if you don't do this, you don't identify your objective, you don't design controls, they don't work, you will probably fail. Okay, so level, who's responsible for this? Well, everyone has a responsibility. Normally it starts with the board. There's certainly board, there's management, and the personnel. Well, I mean, the board don't meet very often. Maybe they meet quarterly. So truly, the board just sort of designs where we're going, and it's management with a little oversight from the board that has to put this all in place. But if you think about it, let's just go to the next slide. The bulk of activity, the bulk of transactions, the bulk of the risk is at the employee level. It's at the staff. And that's where the 90% of the people are. It's the personnel. So that's where our risks are. So we have to put these things in place. And I hope what I hear from Heinrich later on is the important point for whistleblowing is that where does it end up? Too frequently it works its way up. People tell their boss, okay, ooh, there's a problem here. I'm going to tell the operating officer, okay? Or no, I'm going to call the CEO. She or he should know about this. That's the wrong answer, okay? It should go outside either to your internal auditors or the board, okay? Too frequently, I'm working on a case right now where there was fraud and the executive director and the M&E person were colluding, okay? False data and ghost employees, ghost tests. Okay, you say, well, so they had controls in place, they had a whistleblowing, but the whistleblowing went to the chief executive, and that person was part of the fraud. Okay, so I'm sure Heinrich will talk a little bit about that as well. So here's the structure of the Green Book. Again, I'm just exposing you to it. And I think the one thing that I like to say in the Green Book course is your ability to understand compliance in this internal control framework is a life skill. And I say that because it's the sort of thing that wherever you go, I mean, you're in your organization now and you're sucking in and observing and living within an environment and you're taking it for granted. Right? But then when you move to the next organization, you will be in a new environment and you're going to say, that's not how we did it at the last place. Or, we had is this certain control over in this other place. And I'm not saying you should shop around, but what I'm saying is you should, in your organization, try to be part of the risk assessment team, try to be part of the team that cares about internal controls, because you will learn an awful lot. And so the way this works is those three things we talked about, the objectives are across the top, and then down the face of it is our various 5 components, they're called. And within here, there's what's called 17 principles. Okay, and this framework is the exact same framework for the entire world. Okay, Microsoft, Amazon, or the New York Zoo are all going to have the same structure, and you'll have different activities going on, but the same structure. And then across the back here, across this side, it's from the entity at the highest level. So, I mean, we did this course with the US government in one country, and the concept is, do we have controls at the federal level, or is it maybe regional, Pan-African, or is it by country? And even by country, by function. So it's technical, it's the OFM, it's OAA, and sort of each, and the concept here is within this cube, it's almost like a Rubik's Cube, okay? Each cube within each individual block within the cube has its own risk framework, okay, an own risk sort of thing. So the risk of the the USAID director is very different from the risk or potential. Sorry, the control. So we're here. The control activities of the director would be very different from the control activities of the cashier in a mission. Okay, so it's actually quite fun to work your way through this, if you can stand it, internal controls, but I think it's a huge learning experience. Okay, as we said earlier, I'm just about ready to get Heinrich coming in now. So, it's about judgment, and, everyone has different opinions on what the risks are, but by listening to others, everyone has their own advice and own experiences. You say, oh, I guess that could happen here. And so again, that's why frequently we start with our board and management and bring in different divisions within the organization and people representing different interests. Okay, things break down. Employees, people don't understand, we don't train them. As we see here, third bullet point, new technology, COVID's coming in. A lot of people are adverse. How many of us now are so much better at Teams and Zoom and whatever else we use that we were 3 or 4 months ago? Okay, even our preparation here for today, we were on a half hour early. We didn't need all the time. Whereas, earlier we were scrambling to make sure people knew their roles. Okay, so we get better at it. And, again, as things change, and technology certainly enables things to change, but the controls over the technology have to certainly be watched as well. Okay, collusion. Unfortunately, people working together can circumvent controls and systems. And that's where you have to look at, that's why you look at your risk fraud control framework. Okay, if one person has massive pressure, he or she working alone won't have much, I'd say hopefully won't have much luck if there's proper segregation of duties and strong controls. But you get 2 or 3 people who have problems, they can work around the system. Okay, so again, we're talking about the size of how, when fraud is, how many people does it take to commit a fraud? On average, the median, by someone doing it by themselves, which is 49% of the frauds, $90,000. Now, these are global, but you can, we're looking at the magnitude of the difference. 2 perpetrators, certainly more, and 3 perpetrators, which would be management, and normally that would be management, is obviously quite a bit higher. So the more people can circumvent controls, there'll be more fraud. Okay, finally, sort of management override. We've said this once before. Management has the power to tell people to do things. They have maybe ways to get in. So someone's got a backdoor key or a password, or they can come in on the weekends, or again, it's not just all IT controls. It is, they have rights. They can tell security, they can turn off security, they can do many things. And unfortunately, as we saw earlier, I think 21% of the fraud was from management override. So just be careful there. And this is where you have to have ethical behavior. You have to have, at the board level, frequently, again, we don't talk about conflict of interest, but it's very important that we have adequate conflict of interest policies. That's going to be in the fraud, conflict of interest, and ethics course. And that is it's a 6-hour course, and we get much deeper into this. Okay, again, management override. The concept here is, well, I don't think we have time to talk about this, but the owners, the type of fraud they commit tend to be fewer, but they tend to be much greater in terms of how significant the fraud is. Okay, so investigating and corrective actions. I think Heinrich's going to talk a bit about this, but basically you need to make sure that when something happens, you do something about it. As I said before, people know you're not going to follow up on fraud. Why not? Those who have low moral fiber, or again, have great need, will take a chance. So make sure you make examples, unfortunately, out of people who go against your rules. Okay, I'll leave this up to Heinrich. Okay, so again, investigations, you're going to determine what happened, and so that enables you to do the fixes. That's so great. So we had a management override. What can you do about that? Maybe if management signs off, then you need a second management to take action. Again, if management knows they're going to get caught, then they will, there's less of a chance it'll happen. Okay, certainly you need to quantify it. Hopefully you're going to have insurance for this. And then again, if you can recover from the employees, please do. Again, make examples out of them, and then fix your systems. Okay, take legal action. I'm sure, I know Heinrich may have some examples here, so I'll leave it to him. Okay, so let's just get into whistleblowing. I'm going to quickly go through these. I did speak with Heinrich. He wanted me to talk about these. So some of these are musts, okay? And there is a whistleblowing policy in your mandatory standard provisions, okay? And this is what it says, okay? We must, all of you, there's 4 sort of items here. We must inform our employees, and if they don't speak English or the normal language of management, you have to notify them in their language that they are protected, okay? This includes for subawards and subcontracts, okay? That they cannot, so they're protected from being discharged, demoted, or otherwise being discriminated against for whistleblowing, okay? And you can't make them waive their rights. As I said earlier, that was one of the mandatory standard provisions. You can't say, look, here's the policy. We have to tell you there's a whistleblowing policy, but if you do, but we're precluding you from using it, okay? That's not allowable. Okay, and so what is whistleblowing? And that's the next, the bottom paragraph. It's that the employee has a reasonable belief that something significant has happened, okay? Gross mismanagement of the contract, gross waste of funds, abuse of authority, using someone's position on this award. Danger to specific danger to the public health. What are you doing with the needles? What are you doing with the samples? What are you doing with the blood? What are you doing with the drugs that are post-dated? Are you using those expensive yellow boxes, or put them in the garbage and it goes to the trash? Okay. If you're going to damage the public, what are you doing? Well, anyways, those are the examples. So, you need those systems in place, or a violation of the law for the grant. So that's why auditors, we look at, did you follow the policies of your award? Okay, and then so now that you have something gross to say, you've got to tell it to somebody. And here you've got some are logical and some are not. So remember, this whistleblowing policy is for the entire US government. This isn't just USAID overseas. So you could tell a member of Congress or a representative, unlikely for us. Inspector General, possible, but remember, okay, we've got the IG here in Pretoria, which is pretty much in this zone for most of the people on this, or you can, there's an OIG hotline in the States. One of the problems there is that they speak English, okay? So that might not be a great opportunity if there are other better ones. Okay, the US government GAO, they also have a hotline that's a government accountability office. Or now we're getting a little bit more probable, a federal employee responsible for the contract, the AO. Or the AOR, but normally here this means the AO. And that's why we said before, if you know there's a fraud, you must report it here. But this whistleblowing, as we said, could be before or afterwards, as we identified. Court or grand jury, unlikely, or the management official of the grantee. So that's why Heinrich's going to talk about their right to care whistleblowing program. Okay, this just sort of says what happens here, and it's probably a little hard to see here, but what mechanisms do whistleblowers use over time? So this first column is in 2016, what they're using in 2016. Here it's 2018, and here in 2020. And that first one that's declined is the telephone hotline. It's declined from, it was 40, 42, now it's down to 33%. So the blue line has dropped. It used to be as high as 42. It's now down to 33. The second line is emails. It used to be 34, went down to 26 in 2018, but then it went up now to 33%. So a third of the people are using email. The fourth bullet point is web-based online forms. So you have an online system that was quite low before. It was only 24% to 23%, and then up to 32%. So the bulk of these are, again, happening. About a third of all are either telephone, email, or web-based. The other ones are mailed letters, or faxes. I don't know, who's used a fax in the last month? I could put a hand up there, probably zero. Okay, so again, now this is quite important. Parties to whom whistleblowing report, and this is the problem, the direct supervisor. As Heinrich will say, that's the wrong thing, okay? You need an outsider because that supervisor could be part of the problem. And he or she is unlikely. And again, if you're whistleblowing or telling your supervisor, if they disagree with you or they're part of it, that's not really confidential. And of course, whistleblowing should be. You should have whistleblower protections. It's anonymous, okay? And so and then fraud investigation team, and then internal audit and executive. So most of these are actually not going to the right places, which Heinrich will talk about. Okay, so at that, I'm going to stop here and let Heinrich take over. On the last slide, you'll have ways to get in touch with us. There's a scholarship link. These slides, Vic Ray and the team will be putting these up. That scholarship link, you'll see, can go there. And those questions also for ASAP training, you can reach out to, again, through the SurveyMonkey or Foundation for Professional Development. Those are your sources. So again, thanks very much. Heinrich, I turn it over to you. Thank you.
Thanks, Doug. It's an excellent presentation, and I think it makes it very clear what needs to be reported and what is fraud. And if I may say so, I think this should be included in employee inductions at all implementing partners. Now, whistleblowing is not in my opinion, it's not a nice to have, and if you also said, I think it's a must to have in your organization. And unfortunately, it is a highly controversial subject, and many whistleblowers are often subject to retribution, and we see many examples in the press every day of this. Now, here at Right to Care, we consider whistleblowing as an integral part of our commitment to good governance. And it allows our employees and other relevant stakeholders, like you mentioned, suppliers, to raise concerns, and this allows management to address some of our organizational failures in a fast and effective way before it can lead to serious financial harm, and very importantly, reputational risk to our brand. Now, Right to Care uses an independent hotline service called Whistleblowers. There are a number of them available. I know that the big audit firms like Deloitte also provide this service. Now, Whistleblowers is based in South Africa and operates in 26 countries. And very importantly, it offers a service in 16 languages. And we have been subscribing to this service since 2012. And on average, we get between 10 and 20 complaints through this service on an annual basis. Now, I think firstly, we need to focus on the implementation of whistleblowers. And you have to put in a whistleblower framework. It's your first step. And this should address the system for reporting. Very importantly, you need a champion within the organization responsible for managing the system. You need policies in place, and this also includes a gift policy, anti-retribution policy, etc. You need a process to provide feedback on the outcome of the investigation, the corrective actions taken, and very importantly, the implementation of mitigating controls to prevent similar situations from happening again. And then also, very importantly as well, employment awareness and training. Now, when you implement the system, you've got to be aware that a number of countries have got laws in place, which requires you to follow a certain process regarding this investigation of these whistleblower reports. And in South Africa, it's called the Protected Disclosures Act. And you must make very sure that your policies are aligned to these laws so that you don't break any laws. Now, in practice, how does this work? And I'll give you an overview of what we do at Right to Care. So somebody makes a call to the whistleblower line and report fraud within Right to Care. They will write a report on this and then forward it to Right to Care. Now, this, very importantly, this report comes to the designated person in the organization, which I referred to earlier on as the champion. Now, in our organization, this will come to me, the company secretary. But if I'm in any way implicated in any fraudulent activity, this service provider knows not to copy me into the report, and they will send it straight to the CEO. So once we receive a complaint, we've got a whistleblower register where we enter it into, and then I will distribute the complaint to the relevant executive director. I think it's very important. You mentioned earlier on that this should not be shared with line managers. So the executive director of that department will then decide how this complaint will be investigated. And once the complaint is investigated, a report will come back to me. Once again, it will be entered into the register, and then I will provide feedback to whistleblowers, the service provider, to say that, listen, we have investigated the complaint. These are our findings. This is what we're going to do. And then they will provide feedback to the person that phoned the service. Now, what do we do with the reports? At the end of the day, the responsibility for whistleblowing rests with the board of the company. And they've delegated our social and ethics committee to deal with this. So what we do is at every social and ethics committee, we include a report in the committee pack outlining the complaints that we have received. We don't mention any names for obvious reasons. And it's reported to the committee. Then they can ask questions. If they need more information, we'll provide it to them on a confidential basis. And so this provides, what they will then do is they will report back to the board on this to say that they are comfortable with the measures that we have in place and the process that we follow. So this provides our board then with a bit of comfort to know that the service works. If there's a material complaint in between committee meetings, the CEO will take it up with the individual members of the Social and Ethics Committee to make sure that it does not fall through the cracks. Now, why do employees not report the fraud, and why don't they like to use this whistleblowing service? And these are the things that we've, in our experience, have found. Firstly, they believe that their reporting will not be confidential and they will not remain anonymous. Secondly, and I think you also mentioned it, Doug, that they believe that corrective action will not be taken against the guilty. And thirdly, very importantly, they are afraid that they'll be labeled as snitches and be subject to intimidation and even physical intimidation sometimes as well. So those are the reasons why employees are not always comfortable to use a whistleblowing hotline. Now, what do we do? Right to Care, what do we do to address this, and how do we encourage our employees to use the whistleblowers and report the unethical practices? Firstly, very importantly, you've got to set the tone from the top. And that, I mean that executive management in the board must make it very clear that fraud will not be tolerated within the organization and must be reported. And if you don't report it, then you are also complicit. Secondly, we promote a strong ethical culture in the organization. Also, we have anti-retaliation policies in place to support employees that report, which is very important. And then lastly, we provide ongoing training to our employees on whistleblowing. Now, we have regular workshops. We use the outside service provider. They come in and spend half a day basically going through a very similar presentation that you did, Doug, on what must be reported, practical examples of fraud and how the process works, and then also to make it very clear to the employees that this is treated on a confidential basis and that their names will not be shared with us here at Right to Care. Then we also make it part of the induction process of new employees and new directors, so that they are very clear that we have the system in place and that fraud should be reported. Furthermore, we've got posters in the workplace all over the show with the relevant numbers, emails, and then also we have a link on our website. So this also allows, because one must remember that not all the complaints come from your employees. Doug, you also mentioned it. It comes from service providers, contractors, people that sell us IT equipment, vehicles. Get complaints from them as well. Now, also you have to maintain the integrity of the system, and how do we do that? And Doug, there's another thing that you touched upon. We use our internal auditors, and we have included the whistleblowing system in our annual internal audit plan. And what they do is they test the case files, they monitor our policies and procedures, and they make recommendations where we need to make improvements. So they would take the whistleblowing file, they will go through it, and they will also make sure that it's aligned with the laws of the country, and report as such. Now, once they've done their report, it will go to the audit committee and the social and ethics committee, because as I mentioned earlier, they have the ultimate responsibility to the board for whistleblowing. And this gives them assurance that the system is effective and in line with all the legal requirements. And now, just a couple of takeaway points here before I conclude, and lessons learned. Now, firstly, you've got to, for the integrity of a system, you have to use an independent service provider. You cannot have a hotline and then you get your receptionist picking up the phone to record the complaints. So very importantly, use an independent service provider. Secondly, you have to have the necessary policies in place, because that will remove any ambiguity from the process. That's very important. Then also, you have to follow these policies. If it says that you have to investigate a case within a week and give report back to the whistleblowers within 2 weeks, then you have to follow that. Because if a case ever ends up in court, the defense can argue that the company did not follow policy, and then what then? You know, then it gets thrown out. So you've got to maintain integrity, otherwise your employees they will definitely not use it. And as I said, make it part of your induction process. And what we also do is now, just to protect the organization as well, we've got something that we call a policy passport. So we put the policy on this policy passport system, and we make sure that each and every employee reads the policy and they sign off on this. So there's no comeback later to say we were not aware of the policy, we did not understand what we had to do, or issues of fraud. And another thing that a lesson that we've learned is you've got to. We were at the beginning inundated with complaints about workplace issues. For example, Mr. or Mrs. X is drunk at the office. Mr. X parked on my parking spot. You know, that type of stuff. Those are grievances. And as part of the training process and the workshops that we conducted on whistleblowing, we made it a very clear distinction between what constitutes whistleblowing and what constitutes fraud, a grievance. So if it's fraud related, it goes to whistleblowing. If it's a grievance, it goes to the HR department to handle. Once we did that, the number of cases reported dropped drastically, and it focused purely on issues of fraud and not your everyday HR issues. Doug, I think that's it, from me. And if there are any questions or that I can answer, then I'll gladly do so.
Okay, well, I think we'll turn it over to Mary, who'll have some questions, and then between Heinrich and I, and maybe Marcus, if he's still on, we'll see what we can do. Thanks, Heinrich. It was very useful, and I know, the right to care system, as I said before, you're massive, and it's fantastic you put it in place. And we do some work with you, and I think that the employees are very happy that you do this. And as you said, it's ethical, and you're quite decisive in your actions. So well done.
First question is to you, Doug. Can poor employee compensation be a great risk of fraud? That's more for cases of African non-profit organization. The isolation of certain intervention areas constitutes a risk of fraud close monitoring is usually a problem?
Well, I mean, poor compensation, I guess it's certainly, if, you know, that would be pressure if you don't believe you're getting, well, there's two things. One, if you're not getting paid enough, but you know, remember the organization, any organization, you know, the concept of reasonableness pay is based on generally the market. So, you know, if you are getting, let's just say you're getting 100 and everyone else in the organization doing similar work is getting 150, you may be underpaid and feel that it's unfair. Okay, that would lead to rationalization. It's like, well, hang on here, everyone's getting more than me. But in terms of if that money is just not enough to live, well, then that's a pressure thing. So I don't know, Heinrich, what have you seen? I mean, you guys have a pay scale. I don't think salaries. I mean, that's not an African thing; it's a global thing. You know, people could believe they're not getting enough.
Yeah, correct. You know, maybe on that I can just share a story on this. In our previous company, we also had a whistleblowing service, and we had subsidiaries in a number of countries outside of South Africa, and we rolled out the system throughout the region, and we used the service provider to conduct workshops at the various companies. And one of the employees, when it was question time, one of the employees, she was working on a factory floor, and they were manufacturing food. So she asked the question, and we said, you know, this fraud must be reported and theft and this and that. And she asked the question, what happens if she does not have food at home and she takes some of the food from the factory floor and takes it home to feed her kids? Is that considered fraud or not? Now, how do you answer a question like that? I mean, it is fraud and it's theft, but now the lines of the question that was just asked, you know, it's a very difficult thing. But at the end of the day, you know, it is fraud. It doesn't matter what you earn. If you steal from your employer, it impacts on not only on the company's financial situation, but also very importantly, reputational risk, in my opinion.
Agreed. Anyone else weighing in? Okay, Nancy, next question. Mary, sorry. Mary,
Doug, just maybe another thing to share, that one of the interesting things that we picked up from the service provider, who is typically responsible for fraud in the organization. It was very interesting. Two things that they said, like a golden thread through everything, is usually senior management. And secondly, what the internal auditors do, they always go and look for the guys or the employees that never take leave. And they say, if people, they find that if people don't take any leave, they usually got something to hide, and they're too scared to take leave, and you know, somebody will find out that they are involved in fraudulent activities. Just an interesting observation that the service provider shared with us.
Yeah, and with that one, frequently people don't want, you know, organizations sometimes require sort of job, you know, rotation. You know, so this
Correct.
week you're doing this, and next month you're doing this. So you never let the same guy do the same job forever.
Yeah.
Exactly for the reason you said. Something's going wrong there.
Separation of responsibilities and duties.
Yep. Okay.
All right. Our next question, are local implementing partners expected to maintain anonymous web-based reporting mechanism to fraud?
Well, I think it's more, and Heinrich can jump in, I think it's certainly more effective if you can be anonymous, because then you're not afraid of retribution. As you did mention, you'll be bullied, or it could be a problem there. So I think it's more effective, but Heinrich, or anyone else?
Yes, I've never, in the 10 or 12 years that we've had the system in place, I've never come across where somebody actually mentioned their name. They're always anonymous. Now, I think the question also speak to do all the service provider or do all the subrecipients, do they need to subscribe to a service like this? And as I said right at the start, I don't think it's a nice to have, it's a must to have. And Doug, you can probably, I think you alluded to it earlier, that this is a requirement from the funders.
Okay. You need a program. It did sort of indicate not retribution, but I think it's important that, you know, people expect action if they blow the whistle. But the problem is if they blow the whistle and you don't know who it is, you know, you frequently have to follow up. So we've had situations where someone would blow the whistle and then, you know, a month later they say, well, you didn't do anything. We'll say, well, we don't have enough information. And so there's got to be a way to reach back to that person. And, you know, and we've had this, and then we have to convince people, look, we are totally independent. You know, whatever you say to us is never going to get back attributed to you. So, but what we do also find is frequently, you know, out of this case was like 17 claims, only 3 or 4 were actually real. You know, and Heinrich, as you said, you know, so not about someone being drunk, but sometimes people don't have necessarily the correct, you know, the correct view on things. They think something's going on and it isn't. So it is important that you have some way, if the person, you should make that part of your policy that, okay, you are anonymous, but realize if you don't give us enough information to follow up, we may not be able to follow up. So let's have a way, a code or a way, or, you know, obviously you can't have an email or a phone number, but some way for them to reach out to you later on if they don't believe you've addressed it, or a way for you to reach them.
Yeah, we certainly do that. We've had instances where we went back to the service provider and said, listen, is there any way that you can contact? Because sometimes people leave their contact details with the service provider. So we say, please go back to the person. We don't have enough information to investigate, and can they please provide us with more information? You know, time, place. What type of fraud, amounts involved, you know, the people involved, you know, then it makes it easier. So another thing of you know, when people phone this or contact the service provider, they must give as much information as possible right from the outset. It will make it so much easier for us to investigate it and then show that, listen, we are taking this serious and we are going to investigate and we will take action.
Mary?
Yes, okay. So our next question is, give me a minute. Sorry, my computer is freezing on me.
Well, I know one of them. I did see one of the questions people asked about the timing of it, and they asked, you know, what happens if we find out, you know, months or even years later, what happens? I mean, is there any time bar on this? And I think, you know, the answer to that is no, you know, especially if the people who committed the fraud are still there, or you know, just in general, because it could have an effect on the financial statements, or more importantly, the controls. I mean, if it was a weak control and you had a dishonest person there and he or she committed a fraud, and maybe only once, but the control is still weak, it could happen again. So, you know, there's never any limit on when you can report a fraud.
No, exactly, Doug. And that, I think the last point you made is the crux of the matter. You need to prevent this from happening again, and you've got to go back then and look at your mitigating controls and your systems and make the necessary changes to prevent it from happening again.
Okay. So, what actions do you take when someone has committed fraud unknowingly?
Heinrich, you want to take that one? Unknowing fraud? I always like to understand.
Yeah, that comes back to what I said earlier on, that this presentation that we saw today on fraud, people need to understand what fraud is. A lot of people don't understand what fraud is. Like I said to you earlier on, the woman asked if she takes food from the factory, is that considered fraud? Because she wants to feed her kids. So people need to be very clear what fraud is. Then, if this will come out in the investigation, if there are any mitigating circumstances. Sometimes there are, most of the time, no. But I would think it will depend on what type of fraud was committed, and then the investigation will, well, it may find that there were mitigating circumstances, and then the person will be, if he genuinely made a mistake or she made a mistake, there will be a warning or final warning or some type of disciplinary action taken. It's very difficult to think of any examples. Doug, maybe you can think of any examples in this case.
Well, I'm thinking, you like someone hacked in and told you the bank account is different, and you did change it, and then later on you realize, oh, maybe I shouldn't have done that. So they were part of it. Oh, the security guard. Oh, someone said I'm allowed. I left my computer in the office, or my husband works here. Just all the lies that people do on the theft and whatever else. But yeah, I think a lot of it could be, especially these days, electronic.
Or use somebody's access codes for something, and then said, well, the person gives it to everyone to use anyway, so I just used it. But yeah, something to that effect.
Our next question is, what substantial information or evidence is required to report fraud? Is suspicion only enough?
As I said earlier, the service provider, they are expert, they're professionals in this. So what they will do is when somebody phones them to report something, they will act like a detective. They will ask you, they got a whole list of things that they will ask. So they'll say, what happened? When did it happen? What happened? What type of fraud was committed? Who are the people involved? So they'll try and get those the detail out of the person that contacts them. But having said that, if you only have a suspicion and not all the evidence, you should also report it, because usually when there's smoke, there's a fire somewhere, and everything needs to be reported. Nothing malicious, but if you suspect that fraud is taking place, even if you don't have all the information, report it. And usually at a later stage, you may get some more information. You can phone back again and provide that, because what happens is when you phone the line, you will get a case number. So when you phone back again, you can quote your case number and say, listen, this is my case number. I phoned 2 months ago. I had a suspicion that somebody's stealing petrol or stationery, and I've got more information now. I got a person's name, and I've got a time, and I've got a place.
Yeah, I think from USAID's point of view, that that's a good internal perspective for the employee. For the organization, when should they report that to USAID? Almost exactly as Heinrich said, when you have a pretty strong suspicion, even if you're not sure, notify the AO and tell him or her what you're going to do about it. And he's normally going to say, okay, great. But at that point, they might get the IG involved, and the IG would say, well, what are your plans? Okay, do you haven't, they'll maybe help guide you on what to do or what to look for. But certainly you don't want to be too late. You don't want USAID coming back and saying, you should have told us earlier. Okay, so you've got a reasonable suspicion, no reason, even if you're not sure it's fraud, but you're going to look deeper into it. That would be my recommendation.
No, I was safe and sorry. Correct. Yeah.
All right. Our last question: what kind of protection should organizations put in place for whistleblower to prevent victimization?
Thanks. From our side, what we've done, we've implemented a anti-retaliation policy. And there are, if participants want to go look online, there are plenty of these policies available. It's also the Protected Disclosures Act in South Africa, and and similar legislation in many other countries will have measures in place to say that you've got to protect the whistleblower. We read in the press a lot of whistleblowers, they get fired from their jobs. That's not allowed. So there are, in your policy, you can include a number of things to protect. Also, a lot, the information needs to be handled in a confidential matter, and must not be shared within the organization, except with a selected few people that are investigating the incident.
Yeah, I'd like to say it's mandatory standard provision M22. So, and that was those 4 items. Again, it's got to be, you have to notify the employee that they will not, as Heinrich said, they will not be terminated or discriminated against. It's got to be in their local language. And then it has to be, they have to think it's a serious thing. It's not an HR issue. It is, as Heinrich said, it's not people coming to work drunk. It is something, so you have to let them know what a serious problem is.
Yeah.
Okay, but that's where you can go get that more information. And Heinrich, I'm just curious, from a cost point of view, you're a massive organization, 3,000 people, multiple languages, what would the cost be? Any idea?
Yeah, Doug, I'm not 100% sure, but it's not a lot. You obviously pay a monthly fee, retainer. I am not sure what it is, but it's not a lot of money. In rand terms, I think it may be about, it depends on the size of the organization, probably 20 or so thousand rand a month. I speak under correction. Obviously,
like
if you want to do
dollars,
yeah,
it's $1,200.
yeah.
It's not a lot for 3,000.
Yeah, I speak under correction, but it's in that ballpark. Then also, obviously, if you're going to use the service provider to conduct workshops and provide you with additional material like the posters, you're going to pay extra for that as well. But I mean, that is your choice, to use that or not. You can also handle that internally, do your own workshops and provide your own material when you do the employee induction. They can also assist you with drafting all the policies, which they'll probably charge you for. And I would recommend, if you can afford, the organization can afford it, to use the service provider, because they will make sure that these policies are aligned with the relevant laws and of the country. Thanks.
Yeah, I think it's important. You're raising a good point there. It's one thing to have a policy. It's another thing to communicate it, remind people, new employees. I mean, next week you could hire 3 people. Well, you're not going to have a whole corporate function on this. So there's got to be a way. It's got to be on the website. It's got to be part of their induction. But, everyone doesn't, even these days, we don't even have, virtual inductions. So, frequently when we do this training, we ask people, and normally it's the partners and the leadership who says, oh yes, we have a great program. And you talk to the staff at tea time or break or lunch, and they say, we don't have, I don't even know anything about this. Someone's ticked a box for them that says, yeah, maybe I did attend something, but I don't even know. So I think it's your posters in the kitchen, your posters in the bathroom, you're reminding people frequently. I think it's at the bottom of your email, if I'm not mistaken, something about, whistleblowing. It's got to be in people's face. That's for sure.
But very importantly, you need to get employees to sign off on this policy on a regular basis, because it also protects the company. If something goes wrong and the funders come back to you and say, listen, there was a instance of fraud, those people were involved, you did nothing to prevent this, you didn't have any mitigation or mitigating controls in place, you can go and say, listen, these guys were involved. They did know that this constitutes fraud, and they signed off on these policies, so they knew about it. So at least you can show the funders that you did something and you had measures in place.
Yep. Yeah, just, I mean, wearing the auditor hat, even though my picture's not on, that's a very important point, not just for fraud, but also many HR issues, child issues, bullying issues. There's a lot of things where it's just impossible to audit. But if each year when you give that person their contract amendment or change or increase, have them sign all that stuff every year. Conflict of interest policies, I understand everything in terms of data, protecting the data. Could be a whole checklist of things that it puts the onus on the employee. Either he or she's going to have to lie, first of all, if they know they're doing it. And again, it's just a reminder, even if they are honest, that's a rule. So have them sign off.
And Doug, something we linked to this whistleblowing policy, and it goes hand in hand with this, is the gift policy, which is a gray area. And I would urge everyone to put a gift policy in place, a very clear gift policy to say that you're not allowed to accept anything from any supplier, customer, etc., up to a certain amount. You're not allowed to accept any entertainment, and that, very importantly, also extends to your immediate family and friends. And you have to have a register, and this also gets, what we do is the gift register and policy also gets audited by our internal auditors, and make sure that if employees receive gifts up to the allowable amount, that it's approved by their line management and it's signed off in a register.
Okay. Mary, anything else or anyone?
That was the last question. I just want to also say thank you to Marcus Howard. He went into the Q&A section and answered most of the questions. So I just want to extend our thanks to Marcus Howard.
Thanks, Marcus.
Thank you, Marcus.
My pleasure. I appreciate it.
Marcus, any final thoughts of this and what is it? What's your risk management team is planning for assisting?
Yes. So one, again, I want to extend my appreciation on behalf of the CFO, my team, for this presentation. This is very important and critical to the successful achievement of the agency's goals and mission objectives. So definitely kudos to Hendrik and Doug and Mary for this presentation. We definitely would love to leverage this presentation to continue our campaign of fraud awareness, throughout USA, considering the key stakeholders, whether internal hires, contractors, implementers, and contractors alike. So kudos for this. Also, from a next steps, as you mentioned, Doug, so as we, this being one of the major types of fraud awareness, we want to start adapting those best practices that are prescribed by COSO, GAO, and also OMB to then start providing, kind of a tactical plan and tools and mechanisms and guidance documents to answer some of these questions that individuals have. So basically, at the end of the day, how to best implement, fraud prevention, deterrence, detection, and so forth. And then how we would then integrate that within our existing enterprise risk management and internal control system. So next steps, as we're going through, review of our anti-fraud plan, as I mentioned to you, Doug, opening up for you to, to review and comment on. And I'm glad you mentioned it on the earlier slide. Just kind of keeping it simple as far as the steps to do it for fraud risk assessment. Emphasis on the need to document that fraud risk assessment, so it informs individuals and it makes them aware of their working environment, given the end-to-end business processes, understanding the complexities of specific contract or procurement, understanding what are the kind of common frauds, fraud schemes, how to document that from an inherent fraud risk perspective, and then how to inform on identifying internal controls that may be already present, and then understanding if those controls aren't present, take the corrective actions as necessary, and then to continuously monitor that risk assessment plan. So this information will be detailed in the anti-fraud plan, but I think from today's discussion, I think hopefully folks walk away from today's discussion, feeling more educated on the definition of what fraud is and how to take the appropriate steps. So,
Doug, if I may, just the final thing on the whistleblowing, maybe you want to provide my email address to participants, and if they got any further questions on whistleblowing, I'll be glad to share our experiences with them. As you said, we've been in the game a long time, and we've probably been around the block a few times, and I'll gladly share some experiences and answer questions and assist where I can. Thank you.
Yeah, I think I just want to mention that a lot of the recipients or to-be new recipients may not appreciate that this project that Catherine and her team are running is fairly unique in terms of, as Marcus says, their team's going to try to help, and the IntraHealth team has people all over Africa willing to help, and the U.S. government's willing to pay this. This is unique in terms of the true interest in the ASAP project helping local NGOs. And you have to embrace this and take control of it. You have to utilize it because, U.S. government is giving you the ticket, but you got to engage. You got to play the game with them. You've heard about it, and I think those scholarships are fantastic. And not just that, Catherine, I'm not sure if you'd like to describe the other aspects of the ASAP team members, but it's such a golden opportunity. It's like, the U.S. government bought you a gym membership, but you've got to go do the lifting. And here they're opening the door for you to get internal control frameworks and get your structure correct so you can be successful. So with that, that's all the comments I have. I want to thank USAID certainly, and I want to thank Catherine in IntraHealth and Heinrich. I appreciate all your inputs. Thank you.
Thank you.
Thanks, Doug.
Thank you, Doug, and thank you everyone for making time for this webinar. Thank you very much.